just as Rob is suggesting that maybe these cracks are going to get a little bit wider in some of the most glamorous names.
Yeah, we took Facebook back up to 5%. And the reason we did that is I have my own internal index, over 30 private companies that I have investments in. So I get to call those CEOs and ask them how they're spending their advertising dollars in the back end of the year. These small companies, they're between 5 million and 500 million in sales. They don't think past 6 months, but they use agencies to buy space. And what the two narratives on Facebook are, one is that they've got a decline in usership or their growth is going to slow in terms of how users use the platform. Here's what I monitor. Digital transition of advertising dollars continues to grow. There's no change in what I'm seeing in growth rates on how these companies are transitioning to using Instagram and Facebook.
And there is change
continues to grow.
There is change in the way that they're adding users, though. It has us wondering whether you've seen peak social as a result, whether it's Facebook, Twitter, or otherwise.
I'm betting on earnings to be absolutely spectacular in Q3 and 4 for Facebook, based on my own. Look, I'm doing my own work here and saying I don't think there's going to be any change in dollars spent on the Instagram and Facebook platform. It is the #1 spend for private companies in America now that want to buy advertising, and it continues to grow. I don't want to pound the table for these guys. It's a fact.
Well, and Kevin, you're right. Digital is where they're spending, but Facebook is just about to lose its position to YouTube, so it'll be Google and its subsidiary YouTube that'll be the top 2 internet sites, period, end of story, full stop. Facebook's falling to #3. I'm not against your Facebook trade. I'm just saying I think it pulls back further. I think you get a chance to buy it at a little bit lower, maybe another 10% lower than where it is right now. CNBC just ran a story with SimilarWeb that basically said they've shed 4 billion, with a B, 4 billion monthly views that have basically gone over to YouTube. You can't lose that much and still hold the same amount of sway with all those advertisers. That's why I'm a little negative in the short term. But I'm like you. I am invested through a call spread in Facebook, but I am certainly not thinking this is anything close to good news for Facebook and Mark Zuckerberg.
It's in the stock already. And regarding using the YouTube platform,
I think this is the latest earnings that's in the stock. I think the big fall was the latest earnings that were in the stock, Kevin, not what we're seeing right now from a story like the one I'm just talking about. I think that hasn't played out yet.
You may be right. We'll see in the back end of the year. But the problem with using the YouTube version of digital spending is you can't geo-lock it. You can't fine-tune a Florida buy or a Texas spend. You can't do it. And on top of that, that content isn't clean enough. There's still a lot of crazy stuff that you're sitting beside on YouTube. So look, that's why it's a market. I'm looking at pure dollars spent at the lowest risk. Right now, the best value for a small business to mid-sized business is still Facebook because of the feature set it provides. And I'm betting that in the back end of the year, it'll be a surprise on the upside in earnings. Well, we only have to wait a few months to find out.
Right.
But that's why I took it back up to 5%. I know it's controversial, but I did it because my own companies haven't changed their spend at all.